Hi, David.
Hi.
Hey, David, how
How are
are
you?
you?
Great. Getting a lot of showers here in Brazil.
Oh, yeah,
It's
yeah,
raining
yeah.
a lot.
I guess it's
David, thank you very much for joining us. This is a special for us because normally we talk kind of general about general investments in emerging markets, and I think this is going to be really interesting because obviously of your expertise in one specific industry, a broad expertise, but obviously a very important industry. No, I'm going to give a brief introduction, and then I'll have Jean take over, and then we'll begin the conversation. So again, thanks for
Okay.
joining us, David. For those who don't know you, David is I guess can call you a management consultant. You've been around. You've been a management consultant for almost 30 years, working for some of the large firms like Booz Allen Hamilton, Arthur D. Little, A.T. Kenny, and but your expertise specifically, I mean, all of Latin America, but your expertise, because you're based in Brazil, has been in the auto industry, advising OEMs, OEM part manufacturers on manufacturing strategy, M&A, and obviously that's what we're going to discuss today. And it's going to be really, really interesting to hear your thoughts because we have discussed with numerous fund managers about how important the auto industry is, maybe one of the last manufacturing industries Brazil has left. So your views are going to be great. You obviously studied in Brazil, and you got your MBA at Wharton, University of Pennsylvania. So now, as I'm going to let Jean take off and sort of begin the Q&A session.
Okay.
all right.
Thank you
David,
for having me.
welcome. It's great to have you on. So I wanted to just give a little bit of an introduction here. Just picking up the paper this morning, like any day now, you pick up the newspaper, and the news is always China and its incredible manufacturing capacity. So this morning it was the sorry, this morning it was the president of Ford who has gives an interview to the FT. Sorry, I have a cold. He gave an interview to the FT, so it was a front page FT article uh, with the president of Ford, and they announced a new joint venture with Renault. And he made some comments that I thought was really interesting. He said, for the first time in the 100 years that Ford has been in Europe, he really is concerned with the future of the auto industry in Europe. He says the auto industry in Europe is under threat, and basically, we for the reason that we all know is that the Chinese have incredible overcapacity, are extremely competitive now in EVs. EVs are growing fast, and so I thought as an introduction I would just show a couple charts, and then we'll leave it to David to explain all of this to us in detail. Tom, why don't you show the first chart? So this chart here is from OICA, which I'm sure David's familiar with, which is the international organization of motor vehicle manufacturers. And this chart here shows auto production. I just picked 2000 to 2024. They go back further than this. But you see here, basically at the beginning of the period, China is growing quickly. They're growing from almost nothing. They're about the size of Brazil and a bunch of other producers in 2000. And then they just take off. So they go from a production of about 2 million to this is for 2024, a production of above 30 million. And then go to the next chart, Tom. So the next chart is basically the same one, but we just took off China, so we can see the other countries in perspective. And what you see here is that nobody's growing. So this is an industry where almost everybody, particularly if you look over the past 10 years, there is no growth in this industry, with one big exception: India. So India is the other market that continues to grow. Everybody else is either flat or down significantly. Go to the next chart, Tom. And then these are just comparing 2 points in time, 2000 to 24. So in 2000, China had 2 million production. 24, it was at 31 million. You look at the United States, all the big Western markets, from 13 million to 10 million, Japan from 10 million to 8 million, Germany from 5.5 to 4, Spain, the big Latin producer, Latin Europe producer, 3 million to 2.3 million. And then the emerging markets, Mexico's grown because of NAFTA. India is the big grower from being basically nobody on the map to 6 million. And Brazil shows some growth here, but this is a bit misleading. I'm sure David will talk about this. 2000 was a big recession year in Brazil, and production was quite low. But anyway, so they've grown a lot since then. Then go to the next chart, Tom. So here we're just looking at Brazilian production. So you see there from 2000 to 24, you see that Brazil did grow quite a bit during the commodity boom when everything was going great in Brazil, particularly credit, and that peaked in 2012. And since then, the Brazilian market has been in decline, rebounding a bit in 24, and I think rebounding a bit more this year. And so this is a great time to speak with David, and he can give us a very broad perspective on this, as he's been looking at this in detail for many, many decades. And I just wonder, so the comments that the Ford president made about Europe, are they true for Brazil as well? The big automakers, I think GM's probably been in Brazil also since the 1920s, if I'm correct. Certainly became very big in the 50s. Are we facing the same situation in Brazil, David? Is China an existential threat to the Brazilian market? How do you see it going forward?
Okay. I'll make some comments regarding those charts. Basically, you're showing production, right? And then you got to look at over back to the 90s, late 90s, and beginning of the 2000s when you really start trade, right? Global trade and globalization changes the game between production and what is sales, right? So that's one thing where you changed, right? Some production in the US has went down, as you commented, moved from the US to Mexico and some to Canada. Uh, and Europe, when you have the European Union, things start moving even within the initial 20 and then the 27 countries. So there's movement and shift between production and sales overall. And it's correct that when you look at production on the average among sales worldwide, when you go back to the 2000s, except for even when you show the chart between Brazil, China, and India, there is a big thing between affordability, right, as well as urbanization. Right? The big kickoff for China is not only the entrance when China joined the global trade agreement and then allowed all the manufacturers go into China at the beginning of 2000, and then you have the big pickup of urbanization overall, and that what makes China a 30 million production country, but also an internal market of close to 25 million last year, right? Which is different from the other regions where you get like US is something between 14 and 18 in the good years. And when it joined all NAFTA, it has been steady between 18 and 20 million vehicles over the last 20 years, right? When you look at it to show Brazil, Brazil was in the 90s when it started studying this industry, was at 800,000 cars in 1990 and went all the way up to 3 million, 3.5 million in sales and 3.7 million of manufacturing. And then you had the recession in 14 and 15, and then you had COVID. So you have all these issues of what is the market and what is sales. India follows the same situation as China. You have urbanization, you have improvement of purchasing power, And India has a very different market among all the others because India requires that you manufacture a car that's small, right, for affordability purposes. And basically, those cars only exist for India, cannot be longer than 4 meters, right? So, if you want to explore the Indian market, you have to have a specific car with that size. So, it's basically the Japanese mini cars, right? That basically fits into India for growth. Okay. When you look at the perspective of the situation as until last year, where markets tend to be more global and trade was very open, right? That basically favored China overall, right? I'll go into the specifics of electrification a little bit later, but global trade basically helps whoever has the lowest cost production. And lowest cost production basically also favors whoever you get scale. Okay? And that auto industry is not the OEMs who's got the scale, it's the auto parts who's got the scales because they are the ones who really do the parts and really manufacture. What the OEMs provide is the modeling, the market, the marketing of the product, the engineering in terms of what is the design that I want, and starting at late of the 90s and it's changing a little bit over the last 10 years is the platform concept, right? So until the 90s, you basically had one platform with the engine and then the design is one car. And then you started moving towards you have a family of engines, a family of gearboxes, and a floor, and then I can change the exterior. And that provides scale, right? With that engineering and economic concept, that really exploded in terms of what is engineering cost and what is marketing cost and distribution. And then you provide different models, but you have the same basic engineering and the base manufacturing and costing. Okay. The look in the perspective when you look at your question, Jen, regarding Brazil, what is going forward is Brazil is not a country that is, let's say, embracing the electrification going forward, as well as the US or Europe or China or even India, because Brazil not only is a country that, even though now we are in the, let's say, we don't need to import in terms of value petroleum to sustain the energy, but also has Brazil has different energy sources for transportation, right? You have a lot of natural gas. Brazil started the ethanol car, right, in the 80s, right? So there is a lot of options in terms of what is my energy source for transportation. And the country has, over the last 2 years, moved, at least for the next 10 years, a plan that's going to be supporting the auto industry based on these different energy options. And that is going to be postponing the entrance of the battery electric vehicles, right? So that is the Brazilian perspective because there's options for what is the policy for decarbonization. As ethanol is 70% less polluted than the gasoline or the diesel. And gas is like 4%, 40% lower emissions. So for the time being, that's going to postpone an option of energy as well as what is the cost of a vehicle for the consumer. So that's the reason that when you have low purchasing power, an option that is going to be maintaining the internal combustion engine to postpone the battery electric. Okay. Then when there is three, you can look at the battery option globally on a three perspectives. The Chinese chose the battery given the option that I don't want to import petroleum because like 60 or 70% of the petroleum in China is imported. So there was an energy option, right? I need to go to something that I'm not going to be dependent on petroleum. The second thing decision is I need to jump forward technologically because Europe and US were not giving the best technology into China because of the patents that China historically had. So China had in the 2008, 2010 the plan, let's go with a battery electric because I already had the battery electric with the bicycles and the motorbikes. So putting the money to develop this industry really helped China to go up in terms of battery electric and what they call the new energy vehicle. Europe went more towards the green line, let's decarbonization per se, and US more says I need to have the control and understanding of this technology inside of the decarbonization. That was the policy going in the past. So those are the three, let's say Europe, China, Japan is going more towards the hybrid and might India is going the three ways. India is going one part with the alcohol, so they're importing technology from Brazil. In fact, there's a mandate that basically India is gonna put 85% alcohol and 15% in their mix, right? So there's a lot of alcohol blending in towards India for the policy going forward. India is also putting money into the battery electric because there's a lot of money being put in there to attract investment. So the OEMs are manufacturing and developing the supply chain to going battery electric. And don't forget that India has plans to be an export base as well. So that's the need to have that technology in order to be an exporter, not only for Southeast Asia, but might be an exporter for smaller cars, right? Then you go to Japan. Japan doesn't want to go to the battery electric because you have problem with the gasoline, but also they're not self-sufficient with electricity. So that's a problem in terms of energy power. So that's why India is still going with the hybrid and might jump into electric or the hydrogen energy going forward, which is most of the Toyota strategy for the Japanese market.
That's really interesting, David. Could you go into more details on the Brazilian policies to support the auto industry?
Okay. Brazil has an industrial policy that they just renewed last year. They call them Mover, right? So it's movement towards green transportation, okay? Where green doesn't necessarily mean electrification, but means to reduce emission, right? That's why the mandate is to attract investment that you're going to provide solutions towards less carbon emission. And that's where the alcohol, ethanol plays the game, as well as development of a supply chain of gas, but not necessarily petroleum gas. Okay, they're going for methane, where you have all this trash, especially for the agriculture side, for the trucks in the agriculture area, where you have the garbage composed and then you have methane to be compressed into the gas trucks. That's one portion of the other part of the policy, right? And because Brazil accepted where other countries have not, when you call it mild hybrid, which is where you have an electric engine, but it's not a traction engine. It's only an electric engine that helps to start up, not start up, be a little bump in the beginning, as a hybrid vehicle that provides tax benefits not only to the manufacturer but also to the consumer in terms of the every year legal licensing, things like that. So that facilitates that the transition to a more electrified mobility is going to be much slower. That's for the middle to small cars. On the other side, when you go to buses, okay, there are programs for the large cities move into battery electric buses, okay, and facilitation for the last mile distribution where you have need the vans and things like that. So Brazil is going to be a country with multiple solutions and some of them are going to be niche. What is the best energy solution for that application, especially for the commercial side? For the consumer, it's going to be mild hybrids, then hybrid, and for the upper consumer, then it's going to be more towards a plug-in hybrid or the pure battery, which has been the market been developing overall. And the policy, there's another policy which is not the industrial policy, which has to do with emission policy, similar to the U.S. You have the U.S. has the EPA regulating emissions. Brazil has an emission regulation and has a similar thing as the European regulation in U.S. But it's basically a 4-year lag in terms of what are the metrics between Europe and Brazil. So when Europe needs to go to Euro 7, starting I think already this year and next year, there's a lag. And what is the target for Europe in 2030 is going to be a target for Brazil for 32 and 33. So there is a lag between what are the emission regulations in here. And it only gets more tougher in starting in 28, 27 or 28, when the OEMs has to do an average of emission for their sales similar to what the US has. So that makes them to be playing with the lower end vehicles more toward the mild hybrid and the ethanol, and then towards the upper end, uh, let's say, compensate the emissions in the lower end with a better electric with the zero emissions. So there's going to be a similar things like the US has in their regulation for sales. Well, Brazil is, as of today, okay, in the light vehicle segment, Brazil is a fleet of something between 46 million vehicles, of which something around 2% are battery electric, and some 4%, another 2% are hybrid, and the other 95% are internal combustion, right? Whether they're, and of these internal combustion, about 70% supposedly they can use either ethanol or gasoline or a mixture of that. Even though when you look at that, Brazil, oh, and another thing I forgot to mention, Brazil just implemented 2 months ago, they changed the mixture of our gasoline of 27% of alcohol to 30%. And the target is to get to something around 33 to 34%. When you get to that point, a pure gasoline or older car, they're going to have problems. So it's a policy that really makes them to switch to the ethanol mixture or ethanol car. So on the other side, when you look at the demand of energy, liquid energy, Brazil has 60% of the demand is still in gasoline and some 40% in ethanol. And that has been stable over the last 5, 6 years, right? So there is issues of pricing of ethanol because ethanol is still priced at the pump around 70% of the gasoline. And that is the energy parity, around the energy parity between ethanol and gasoline, right? And if that doesn't change, demand is not going to change, or people still preferring to use gasoline over ethanol. That's one thing. The second thing is regulation is on the testing point, is not into the usage point, right? So you can enforce as much as you want that says, okay, OEM, you have to produce a car that when tested on on the laboratory provides certain emission. But then when you go to the consumer, people still uses 60% gasoline and only 40% ethanol. If that price at the pump doesn't change, you're not going to make people switch from gasoline to ethanol. Right? So that is a problem in testing, sale, and usage.
David, I mean, years ago, when I was actively traveling in Brazil, I remember getting in a taxi, for example, where it was like you had a gasoline engine, ethanol, and then natural gas, right? So there were cars that had three different outputs of
Mhm.
emissions, and so I mean, given that that was many years ago, and so Brazil has sort of evolved and has always been a leader in this type of these type of hybrid type of situations. Could you see a situation where you have, you know, electric, ethanol, and then some regular gasoline? I mean, could you see this type of thing where it's just you could have four different types of say something powering a car? I mean, or is
It's
Brazil evolving to ethanol and electric?
the the a car that's not ethanol gasoline here in Brazil, the engine, right? Going forward, if you put in a new car that's not ethanol gasoline, you can have both options. It's not marketable in Brazil. First thing, right? Second thing, it is given that all the hybrids that starts being manufactured in Brazil, they're gonna have an engine that's ethanol gasoline and an electric engine. Right? The only ones that are providing a hybrid car that's not ethanol enabled are the Chinese because they're imported vehicles, right? For now. But for example, GWM, they are already making the changes in the engine that is going to be enabling the engine to have both gasoline and ethanol. Okay? On your comment regarding the car with the natural gas, it's a transformed car, right? Usually it's in gas. You do it in São Paulo if you're a high user, and a lot in Rio because Rio, strangely, it's the only state where the alcohol doesn't keep the parity of the 70%, right? Or at least, even though it's very close to production of alcohol. The issue is that no, Rio is very close to the petroleum base, so gas is very cheap in Rio comparatively to the other states. That's the thing. The second thing is for taxes, it makes sense if to have a gas and a natural gas tank because you're a heavy user. Because the payback is something. If you gotta be running something around 100 to 200 kilometers per day over 8 months, and then you already paid all the transformation and documentation for the car. So it's a usual for taxis to have natural gas, but not use it for the normal consumer. Okay? So as I said before, one thing is I get a manufacturer a hybrid car with gasoline and ethanol. The other thing is have people really use ethanol as their combustion engine in terms of what is the energy option, unless you have the differences in prices. Right? That is a perception, partially true, that the ethanol it's more abrasive to the engine. So the lifelong usage, if you're full, always ethanol, always at the long run, if you're like in the 8th or 10th year, the maintenance cost is going to go up, right? And that's historically true.
So who's dominating with the hybrid technologies at this point, and
Okay,
where are these technologies coming from?
hybrid, the real hybrid technology is basically Toyota, right? And certain parts of the the Chinese GWM coming in with a hybrid into Brazil. Stellantis has what they call the mild hybrid, right? Which is the electric engine is not into, even though they already have the full hybrid, but they're not implementing it so far. Everybody has plans to go with the full hybrid starting next year and at most at 27, because by 28, as I said, the mild hybrid is not going to be enough to help in terms of the emission regulation when you go to the next phase of the emission control. Well, um, when you say hybrid, it is there's two differences between the technology of the hardware and the technology of the software, because everything in the hybrid is a lot of software to manage which engine kicks in and what time it kicks in, right? At that point in terms of when you talk at the software side, the Chinese are ahead of anybody. Okay, BYD, Great Wall, all that stuff, and uh, not only they have uh, the software management and the simplification of the hardware to make it easier to manufacture for that. For the Brazil side, a lot of thing has to do when it's too young for the hybrid in terms of it is durable. What's the quality on the long run, right? You're talking about 3 years of really the sales growing up. Huh? Uh, the European and American hybrid still needs to prove here that can sustain durability. Right? Toyota, of course, has the quality brand, has the perception of the quality. The hybrid that they bring in here is basically from the Prius, right? So the perception of quality is there. Right? Toyota doesn't have a plug-in hybrid. Right? So it has to do with how the acceptance grows up. And interestingly, the hybrid is only $500 between your traditional car and one model and a hybrid car. Even though, in terms of dollars, it seems to be small, but for the Brazilian purchasing power, sometimes a little bit big. Right. One thing that I didn't mention here is when you're talking electrification, especially in large urban areas, which is very verticalized, has a lot to do with the fire department in terms of the regulation, how I can put the charger in your home, because different from Europe or US, now, the large cities are condominiums, are buildings. It's like New York, right? So where do I put the garage? Where do I have the charger? I want to have my own charger, and that's when you have your charging your home. That's when you have the benefits of the economy of what how much you're paying for energy. Even though when you go to the streets compared to the kilowatt you're paying at home, if you go above 4 times the energy cost from your home, then it's economically it doesn't make sense you go full battery, right? And there are certain places that's above sometimes 5 times, 6 times more than you're paying for your kilowatt at home, right? So there's a pricing. So that's why most of the battery electric is from the up down. And then people who are mostly around the suburbs of Sao Paulo or the cities that they're living in homes are not necessarily in buildings, right, in the garage. And so there has been a lot of debate in trying to regulate how you're going to put chargers in the garage in the sub, which is something similar that Chile faces in that regulation, as well as Argentina.
So you think the plugins is going to be a very small market, just a market for the elites?
There is something that we didn't talk here is plugin could be an option, but there is the other option, which is what they call the range extender, which is you're always on an electric engine for powering the vehicle in terms of traction. And then you have an engine that's basically a gasoline or diesel engine to be a generator of the electricity that goes to the battery and then to the traction thing. That's something that has grown even in China over the last 2 years, right? The leader is Leap Motors in China. Leap Motors just came into Brazil 2 months ago with Stellantis, right? So that is an option where, okay, I cannot charge at home, but I'm putting the gasoline or the ethanol, and it's more economical in terms of money, how much you're paying for a kilometer that you run, and that could be an option. That is a technology that even BMW tried some 8 years ago, all right, when they started with the i3 and the i8s. but the engine was too small, and now the generator is getting bigger. In China, it's going to be in Brazil, and even in the US, they're trying it. The Ram pickup is putting a six-cylinder engine to be the generator. So, uh, so something that could be an alternative for, let's say, countries that you know have a lot of chargers, as well as the energy price depending on putting energy on the streets.
David, how is Brazil dealing with current and potential dumping of EVs from China? I mean, obviously Chile, Africa, some parts of Europe. They were selling cars for like 6,000 US or 6,000 euros. I mean, it's crazy prices. But has that happened in Brazil? And how is the Brazilian government kind of looking at that dumping?
Brazil, it is a very protective country of its industry, of its commerce, and everything else. Right. So import tariffs of vehicles, traditional vehicles, has been almost impossible until the beginning of the 90s. And then starting 94 was set up for 35%. I'm saying passenger cars and pickups. Trucks is a little bit different in that sense. And in 2018 and 19, they lowered the tariff to between 2 and 4% for passenger cars having hybrid or battery electric. Right? The initial schedule started in middle last year to raise until the mid 26. For the 4% went to 10, and then would go 5% per semester, going back to 35 in 2027, beginning of 27, right? So that has been renegotiated uh, this year to be supposedly to start the 35% in the middle of next year, right? But in exchange, what has been done is because of BYD and Great Wall and some other OEMs, that they kept the SKDs and CKDs not going up to 36 or 35%, but kept for zero for a certain period. But you have to produce in here. And that's how Great Wall and BYD and even GM now bringing car from China to assemble kits with 0% import tariff for until the end of next year, right? And then goes back to 35%. And that the fuel build-up cars should be back to 35% supposedly middle of next year, but has been talks now, given the government situation in terms of primary revenues for the government that needs more taxes, they might raise taxes in the beginning of next year or 15 days.
So the Chinese only have until the end of next year to import the parts without the tariffs.
Without the tariffs.
Can you tell us exactly what the Chinese are doing in Brazil, and how are they doing? How do you see their prospects?
Uh, well, let's say there's different situations, different strategies of the ones who are playing in Brazil. Right? BYD overall has been the BYD group has been in Brazil since 2012. They started with battery manufacturing, some buses, not a lot of volume, and they manufacture batteries or they assemble the batteries all the way in Manaus, which has tax benefits. And then this plant in Bahia, Bahia, they're gonna still keeps tax benefits. They bought the Ford plant, right? So the Northeast has a different industrial policy in terms of taxes that is gonna go all the way up to 32, right? So manufacturing in the northern eastern states, you have tax benefits for the internal tax, the IPI, which is one of the value-added taxes inside Brazil. As long as they're assembled right here in Brazil. Yeah. Then, so BYD got the extension of the zero kit imports until the end of next year. So they started assembling the Dolphin. There's certain Dolphin cars already being delivered, but BYD has something like 20, 30,000 cars in the ports, right? They really imported a lot, and BYD has been very aggressive. They're not making money, right? They're not profit out of this, but clearly is a strategy of building the brand, a lot of models, right? Selection all the way from 120,000 reais all the way to 500,000 reais. They're gonna bring their luxury sport cars. Interesting, Brazil is the third market of Ferraris outside Europe, and considering Europe as the overall, and it only loses to the Arab countries and to the US, right? So there's a lot of Ferraris and sports cars and luxury cars in Brazil. So BYD is gonna bring their sport car, the U9. So the lineup is really aggressive and complete from the 2020 to something like 3.5 million cars for this reais for this sports car. And they're manufacturing that little cars. They're going to manufacture another SUV has not been disclosed. Okay, they are electrics. They're going to be assembled electric. Okay, electric, but they're going to be keep on importing the hybrids. Okay, then suppose they kept the capacity 150,000 cars. Okay? They haven't been disclosed, but by the size of the plant and what equipment is in there, 150,000. There's going to be two plants in the area, right? They have to invest to put a battery plant a lot in line with the assembly line. So they have to make an additional investments to put a battery factory in the Northeast in Bahia. Right? Great Wall, they also started the manufacturing in São Paulo, in the former Mercedes-Benz plant. They're going to be producing a SUV, a mid-size SUV, right? And hybrid though. So the capacity is a 30,000 plant. It's much lower so far. So that those are the plans so far. Even though Great Wall is the lineup is very strict. We're talking only 5 models. While BYD, if I'm not wrong, they have something like 14 already. The offering. So, what are the next plans going forward in terms of manufacturing? Well, Leap Motor is going to be producing cars inside the Stellantis plant in Northeast in Pernambuco because Leap Motors is Leap Motors in China. So the joint venture between Stellantis and Leap Motor is that Stellantis is Leap Motors International. Everything outside China is managed through Stellantis, right? And the plant in the Northeast next year is going to be starting assembling the Leap Motors vehicles. Geely just purchased uh, 25% interest of the Renault plant in Brazil in the south. So most likely they're going to start assembling the EX2, which is a small car that's priced right below the Dolphin and is starting to have traction in sales in 1 month that's being launched in Brazil. So those are the ones with manufacturing plans. The one that has manufacturing plan but has not been fully negotiated is there is a cherry plant in São Paulo that's been closed since the Caoa organization took over the cherry business in Brazil. And the other three brands that Cherry has are negotiating to reacquire that plant back in order to assemble or mold the vehicles in that plant, as well as the Jetour and the other brand they're starting to sell here in Brazil, which is basically the same platform as the 5 level, the Cherry Tiggo 5 platform that they have, but electrified in there.
It
The
sounds like the Chinese, like they're aiming short term to have about 10% of capacity. Does that sound about right?
In terms of market share,
Yeah, in terms of
sales.
production capacity, right? Production capacity must be around 3 million or so, and
Okay.
they're aiming for about three hundred
Now,
thousand.
production capacity supposedly in Brazil is 4 millions
Four
when you
million.
count light vehicles and trucks, right? So if you only say light vehicles, we're talking 3.5 capacity. Uh, the Chinese were saying less than 10% capacity
Yeah.
for the time being.
How competitive are the Chinese paying the full 35% tariff?
Let's put it this way: when you look at I look at this benchmark with the BYD lineup, okay? Because that's when you have prices in Europe, in Australia, and in Brazil, but you don't have it in US, right? When you put a dolphin or a seal, a dolphin here in Brazil is something like $30,000, right? In China, it's sold at $10,000 direct exchange currency. And the dolphin is also sold in Europe at $25,000, 25,000 euros. Right? And then you make the same calculation for the seal. Right? It's exactly the same thing. The seal, I think, is $50,000, 47,000 euros in Europe, and is around here $50,000 in Brazil. And if it when there was 4% import tariff. When Europe was zero, supposedly 2% import tariff, and now BYD pays 18% import tariff. So either is still some margin is positioning the cars between what the Tesla would be positioning in Europe, and then I put strategically the pricing scale, what is my price point and how I want to position. If that is the strategy of price positioning, uh, that's one thing. The second thing is there is some margin for export yet. It's still even with the 35% tariff because the tariff is all the way in the FOB price and not in the final pricing. And then the big issue is how it is necessary for the Chinese to export to get some profits, given that the Chinese market is so competitive that the 128 brands that exist in China, where let's say 40 survivors, right? And how much are going to kill the overcapacity as the Chinese government has already has is not sustainable that. And who's going to make the money to survive and be the 20 brands or the 40 brands out of 128 that's going to be surviving in the long term? And how much profit really I'm be making in China, right? And where export tends to be, even if it's marginal additional revenue now, how it is going to be important in the long run to establish the revenue and the profits to bring back to sustain the operation. I don't know if you looked at, I think it was an FT article like a week ago or 2 weeks ago, where Volkswagen is basically establishing a development center in China, where it's basically is half the cost, half the time, and it's better. So China is going to be dominating not only engineering wise, as solution wise, and not only have good engineers at lower cost to be the development centers and technological centers of a lot of these developments going forward.
David, when you look at the auto manufacturing specifically in China, and I guess I want to relate to Brazil, it's a lot about employment, right? So these 130, they employ a lot of people, and it's going to be tough uh, to get down to 40 because that'll mean more people that'll be obviously unemployed. But in Brazil, as these new plants go up, I mean, do you have a feel for, let's say, square footage, let's say per person per square footage of the old, let's say Volkswagen, General Motors, and then you look at the new plants that the Chinese and others are putting up, like how many people per square like are they going to need? What's the difference in employment from these new plants in Brazil specifically than the old plants? And does Brazil have this concern that there is in China about unemployment as we consolidate?
Supposedly, when you go full battery electric, right, uh, and you go from the full assembly of the battery and the car and the electric engine, and if you look at the full supply chain and comparatively to this full supply chain of a traditional car, where nowadays the OEM doesn't have a portion of the supply chain, you could be cutting a third to half of the labor, right? Because a battery plant could be a dark plant, okay? An electric engine plant could be almost a dark plant. The only thing you have to put in the cast for the roller, you might need to have somebody to see it. The same thing for the clutches, the gear clutch, compared to the electric engine transformation, which is almost a dark plant. Right? The only part you're really going to be needing people is the final assembly and partially. It's basically the finishing of the cabin. You're going to be needing somebody. All the rest, you can be automating it. Right? So that's the only part that's really you need labor, the finishing it, the finishing of the vehicle, the final touches, the quality, even the quality control. You have all types of sensors today. Is the paint perfect? No, the brilliance, the thickness of the paint, how the door opens and closes, the noises. All of this, you can have sensors and robots to do that. I'm not even talking about robots that BMW is already testing. Right? If you really get to the point they have the robot to really assemble the vehicles, right? Let's say 20 years, 10 years, right? You really don't need the labor in the plant.
Yeah, the EVs, the biggest losers from EVs are the auto part companies, right?
Yeah.
These cars have a lot fewer auto parts. I wanted to ask you. So you look around Latin America now. I understand that markets like Chile, uh, Peru, Bolivia, Ecuador, they've basically become Chinese markets. So the Chinese are able to these markets. Brazil used to be able to sell there. I imagine Brazil can't sell cars there anymore. Why would
Brazil
the Chinese need a plant in Brazil if they can just export directly to these markets from China?
do with the protectionism that all the Mercosur countries have, right? There is a need of getting labor. You need to get. It has to do with, especially the current government, which is the Labor Party, right? You need to provide labor, generate labor. Brazil, even though like the agribusiness has a lot of automated, right? Everything else, Brazil is not a full service society like Europe or US. Right? I need to have the development of the industrial segment, even though the industrial segment has shrunk in terms of the relevance in the GDP. The auto industry is something is still between 20-22% of the industrial sector. But because the industrial sector but it doesn't have the size of a market like Brazil. Peru and Chile is a month of Brazil market. No, the thing is, okay, Toyota exports from Brazil, the Corollas hybrid and things. So there's one thing is manufacturing footprint strategy. Who has the capacity is going to be providing the vehicles to certain markets, right? And then when you look at certain vehicles, if you're going to export from Brazil to Chile, it's going to go for now. You're going to go for trucks, right? It's going to go all through top of the Alps and then go down. Whether the other side is going to go with a ship is much easier and economically cheaper. That's one thing. So the manufacturing in Brazil, you have the issue of requirements to explore the size of the market, right? Because the tariff is still for certain manufacturers, it's still going to be a barrier to really export the market in terms of volume. If you want to play with the volume size, it's not a problem for Mercedes, right? Top line. If you want to play for the lower segment, which is 60% of the market, you need to manufacture here. The scale and the size, you cannot sustain eating up 35% of tariff for a large scale vehicle. Right? You can sustain for a certain time, but not for a long time. Right? And that's why the thing, differently from when you look at the NAFTA deal, NAFTA is important for Mexico and Canada to explore the American market. Mercosur is important to Brazil so that Uruguay, Argentina, and Paraguay doesn't get invaded by outside. So it's more of a protective strategy for the Brazil manufacturer than anything else.
Of course. Yeah.
That's great. Thank you,
Okay.
David.
So
Thank you.
this we should conclude here. But so what? Tell us: are the prospects for the Brazilian auto industry bright? Is this a sector that you see as
I think
as a growth sector and a profitable sector for companies?
it's a hard market to have a profit if you don't have tax benefits, right? Or you don't play with the tax benefits here. Brazil, you have a 1.5% interest rate per month on car financing, over 15% interest rate nowadays. So buy a car. Affordability for the average Brazilian and have a car is very expensive, right? So financing is important, tax rate is important, labor is important, and it's still going to be a relevant industry for the next 10 to 15 years at least. Not only for the new cars, but also because average age of the fleet in Brazil is close to 11 years, right? And to only survive on imports, the policy in Brazil doesn't allow it. No. Not only philosophically, but also given the scale, there is no country above the 2 million, 3 million that has shut down its industry. Australia shut down the industry. Chile can shut down an industry, right? Any country that doesn't have that scale uh, uh, and sustain a manufacturing, even if it's a minimal, is going to keep that. The only very important thing is Brazil is the fourth largest country for heavy vehicles when you count for the trucks and buses. He only loses to China in certain, and you have to combine the whole Europe for that. And trucks and buses don't travel well in boats,
Yeah.
right? That's the first thing. The second thing is you have to have a assembly line for the coaches, right? Brazil is the only country where you have a Volkswagen truck, right? Even though the Volkswagen group has Scania and MAN as this truck manufacturer, right? Assembly. Volkswagen has its trucks, its buses, it's developed in Brazil, it's manufactured in Brazil for what is for a poor or a complex country in terms of the logistics, the quality of the roads, right? And even now, it's exporting these, more, let's say, dependable trucks to other markets because it's designed, developed for countries that has bad roads. And let's say I need a truck for harvesting the sugar cane. Now it's a truck that's going to live for a year, 2 years at most, and then it's disposed, right? Because if you bring in an European truck or an American truck, which we don't have, it basically doesn't survive. They don't survive. Even Mercedes has to transform this truck to survive the Brazilian conditions. You know? So that gives the scale, even when you consider for electric buses. The electric buses in Brazil it's a Brazilian chassis with WEG providing the engines and Brazilian aluminum and things like that. And then the battery comes from China, right? CATL batteries, the pack is assembled in Brazil, but everything aside the battery is Brazilian developed, right?
Sure.
So there is still some space to. I'm not saying that Brazil is going to, for a market of 2.5 million or even 3 million, if they hope to, may still be manufacturing for 2.5, but is a sizable for 1.5 million vehicles, 1 million. And then how many really car manufacturers or assemblers are still going to be surviving in Brazil or take the way that Ford decided? I'm only going to be selling vehicles. I'm not going to be assembled in Brazil anymore.
No, that's great,
And
David.
then they start.
Thank you, David.
Okay.
Thanks so much. That was very enlightening.
David, thank you.
Thank you for having me.
That was amazing. Thank you. Thanks for your time, and we really appreciate it.
Okay. Thank you.
All right. Talk to you soon.